Hey, good morning, everyone. Welcome back to another episode of the Nonprofit Show. Right as we were coming on air, our executive producer, who no one ever sees, he's behind the curtain, he said, "Hey, you guys, have a happy episode, have a happy show." And I was like, "Yeah, that's a good thing. We are going to do it." And we're going to do it because we have Paul Preziotti on, CPA with Johnson Lambert on, and he's going to be talking to us about the state of nonprofit finance and kind of like where we are in the nonprofit sector, kind of giving us a temperature take on this. I'm delighted to welcome Marquette Whitlock, one of our intrepid CPA. I started to say CPA
CPAs.
co-hosts. It's just as hard as being a CPA. I'm going to call it out, Meico. And you're here today to help us have this conversation. We are also really fortunate to have the conversation every day with our presenting sponsors. That includes Bloomerang, American Nonprofit Academy, Staffing Boutique, JMT Consulting, Interim Executives Academy, Your Part-Time Controller, and Fundraisers Friday. I'm Julia C. Patrick, CEO of the American Nonprofit Academy. But more importantly, I'm joined by Meico Marquette Whitlock. He is the mindful techie, somebody that we turn to on all manner of things when we need wisdom and a calm head, calm voice. So Meico, welcome back, my friend.
Thank you for having me. Excited for this conversation.
I am too. So Paul Preziotti, we met, you and I, at the Innovate 2025 FinTech conference. I sat on a panel with you, if I'm not mistaken, and I just really had a total admiration for some of the things that you said. I thought it was really cool. And so I was like, oh man, I got to get you on the nonprofit show to talk about some of these things. So first and foremost, what does Johnson Lambert do?
Well, Julia, thanks for having me. A little bit about our firm, Johnson Lambert. We're a national CPA firm that provides audit, tax, and other assurance services to the nonprofit, employee benefit plan, and insurance communities. And again, we're a national firm, and I co-lead our national nonprofit audit practice. And as you said, 2025 has certainly been an eventful year. I don't know how it's possible. It's almost halfway done, but here we are.
Yeah. And, I think that was one of the really interesting things, sharing some time with you on the stage, was that um, if you had been asked to speak, and I'm speaking for myself, at any other point in time in the history of our profession, I would have been like, oh yeah, piece of cake, easy. I kind of have a standard shtick I do. And the things that have changed so dramatically, it was like all hands on deck. Everybody had new ideas, everybody had new concerns. So it made it very interesting, right? Because it wasn't the same old, same old. And so that's, I think, why we really wanted to get you on today to talk about what are some of the things that you're seeing. And so let's start off with the concept that strikes fear in the hearts of many a nonprofit leader, and that's funding and budget scenario planning, looking at some of these opportunities or issues. What are you seeing there?
Yeah, a lot. And your words are really they really come present here, right? Because if you think about if we did that presentation back in December 2024, how much different would it have been than where we're at right now, right? And now this year alone, each month it's like, oh, that happened. Now that happened. Now that happened. I'm getting to the point where there are these deadlines for presentations 6 months, 6 weeks out. And it's like, that's not going to work, guys. Everything's going to change before we present on it.
Mm-hmm. Yeah,
Yeah.
it's
So
really
first thing that comes to mind, especially, is the variability with funding, right? And I think it's fair to say the new administration, regardless of what you think of them, they've done a lot. And if you work with a nonprofit organization, I would say 95% of organizations have either been affected directly or indirectly, with probably the most powerful impact being if you have government funding, right? And we used to say, oh, our government's going to pay everything. That's a solid source. That's going to stay in perpetuity. And, I think it's fair to say that's no longer the case. And if you have government funding, and even if your agency isn't one of the ones that's in the news, I think you have to think about a scenario in the future where that funding doesn't exist, Julia.
Yeah, it's an interesting thing, and I agree with you. I think that I would say in my mind, I would never have been able to plan that out. I align it to could we have ever planned out a global pandemic? Right? I mean, it's some of these scenarios we were just like, well, that's never going to happen, or if it does, it's going to be a blip and it'll
Mhm.
correct itself. So, talk to us a little bit about how we do this scenario planning and why we do it.
Yeah, great question. So the reason for doing multiple scenario planning is that you have the ability to be nimble when and if things change. Let's say you have three scenarios with a government grant, right? And you assess different probabilities for that grant. One is the best case, the bright sunny day scenario where 100% we're getting that grant. Then maybe we have the 50% scenario where, okay, we've got the yellow light, it may or may not come in. And then we have the red light scenario where that grant is no more. It's gone. If you project out that scenario over a year or two, and you can see both the implications from a financial statement perspective, then also the implications, which may even be more important. And I say this as a financial statement auditor, a lot of times in the intermediary, a cash flow analysis is more important because keeping the lights on is the biggest concern.
Right.
That way, if something changes, if something happens, you can take quick action to say, okay, we're in scenario 2. We have less funding than we originally thought. Here are the actions we have to take, whether it's adjusting staffing, whether it's putting more efforts towards another program, whatever it is, you have that information at your hands to make quicker and more effective decisions.
Mhm. Okay, I've got to ask this question to my dear friend Meico. Have you been a part of this? Have you been a part of scenario planning?
Yeah, absolutely. And I think, it's interesting hearing you talk about this in the current administration. I think even before this, we've had opportunities, even with the pandemic. When we think about that, there have been natural disasters and other things that have happened over the course of our lifetime that have made this type of planning sort of necessary and an opportunity to really exercise, hopefully, what people have already been doing. But I'm curious, with the folks you're working with, are there lessons that we can carry forward from, let's say, COVID-19 or from maybe organizations that have been impacted by natural disasters in the past that we can bring forward to where we are now?
Yeah, I think there are. The first thing that comes to mind that I already mentioned is, don't assume anything is 100% set in stone in the future. And that's why we do this scenario planning in terms of adjusting for potential impacts in the future. Even if it might not happen, even if it's a 25% chance, if you have information from a budgeting perspective for that scenario, you have a better ability to take action. So that would be the first lesson learned. The other lesson learned is this is not something you can do overnight. And that goes back to building in time for review and approval at multiple levels. And I'm always a person who likes to start at the top, right? So if the board has to approve these scenarios, we're starting with when does the board have to approve it? When does the level below have to approve it? And so forth. And I think you'll find doing that exercise, it's not an overnight equation. And you also need to be conservative with how you do it, right? To give you the amount of time to be thoughtful in the approach for it.
So it's interesting. So you mentioned the board, and as a board member, former board member, um, one of the things I found is that there's a sort of different levels of financial, I guess, competency, if you will. And I'm curious, from a board member perspective, especially from someone who maybe finance is not their area of expertise, in this particular environment, what kinds of things should they be looking for? What kind of questions should they be asking to make sure that their organizations are prepared?
Good
That's a great,
question.
that's
Yeah.
a great question.
Yeah.
Um, yeah, so a couple of things come to mind. The first thing is I would assume if you're working with a nonprofit, unless you're a nonprofit with a financial purpose, a good chunk of your board is not going to come with a financial background in play. Now, they're probably very well educated folks, they just don't have that skill set. So that goes to the mindset of we have to be doing some sort of training to give the folks the tools they need to make the decisions they need to make. So that's the number one thing, is always building in some sort of training, not only for your board, but I think the same lesson goes throughout the rest of nonprofits, right? Because we have our accounting, we have our finance staff, but a lot of times they're reviewing the information after the transaction have already happened and they can't change them. But who can change these transactions beforehand? It's those non-financial managers. So making sure you get them some sort of training.
And I presume it's ongoing as well. It's not a one-time thing. It's an ongoing thing that we're exercising and practicing.
Yeah, I think an annual training at a minimum for financial acumen and understanding nonprofit financial statements and budgeting. But I also think it speaks to making sure we schedule time between those non-financial managers and the financial managers so they can give them feedback, right? Because you want to empower those individuals to make decisions, but you also want to be there as a resource to help them understand, okay, if I make this decision, what is the potential financial impact?
Absolutely.
Yeah. Meico, I'm going to have you go ahead and lead us into this next part because it kind of falls into line with what you were talking about.
Absolutely. And I guess you're sort of talking about staffing, and one of the things that comes to mind for me is that I know that a lot of, particularly small or medium-sized organizations, this might seem like an additional burden on top of sort of their day-to-day. And I'm curious, like, what do you say to folks to say, like, look, we're already slammed. We already have so many different things that we're accountable for in terms of funders. You're asking us to do this one extra thing on top of that. Like, how do you respond to that? And where can folks start, maybe as sort of a simple place that where they might feel overwhelmed with this idea of scenario planning?
Yeah, and I would acknowledge that it's natural to feel overwhelmed. As nonprofits' capacity is something they've always struggled with, and I don't pretend to have the answer for all of that. I think you have to be creative in this exercise in terms of how you assign roles to different individuals, and part of that goes back to what we were speaking about earlier in terms of outsourcing some of the decision making to non-financial managers. But two things that come to mind beyond that. The first is considering alternative staffing arrangements. And, outsourcing is one. Again, this isn't a service Johnson Lambert provides, but other firms that we network with do. That can go a long way in terms of the cost can be less than one full-time equivalent, and you don't have benefits. And you get this resource that could be more powerful than what you had before at a cheaper cost. Now, there's other things you have to weigh with that as well in terms of this isn't going to be your full-time employee in most scenarios, and they're not going to be responding to every email within 2 hours. But, I think for a lot of organizations, the pros are going to outweigh the cons here for sure.
Yeah.
Absolutely. So just to clarify, so you're saying that in this case where an organization is overwhelmed, you're saying outsourcing particular functions, let's say scenario planning for a fiscal year, for example, a certain set of tasks. You're saying that could be one way that organizations could creatively think about staffing in this area?
Yeah, and that's the beauty of it. With outsourcing, you can outsource whatever you want. If you just want to outsource the budgeting process, that's doable. If you just want to outsource payroll, that's doable. Maybe it's a CFO role. Maybe it's the roles below the CFO. That's what I really like about it, the potential for this arrangement, in that you can make it what works for your organization, and it doesn't have to be set in stone in perpetuity.
Absolutely. So I'll go ahead, Julia.
Okay, that's like a hair and fire moment for me because I don't think I'd really thought of it that way. I was thinking it's like all or nothing. You're gonna take everything off the system and have somebody else do it. But I really like what you said, is to look at what it is that you're struggling with, or what it is that you need, maybe more talent and expertise and even speed, and then look at it that way. And I would also think that if you invest in something small up front, then you can see how it went and determine where you're going to make those additional investments, right? I mean, it kind of is like a practice session.
Yeah, I'd agree. It's not something that has to be set in stone. You can see how it works, and you can always adjust it. I think it's something all nonprofits should consider. And again, it's not going to be for everyone, but especially for nonprofits with more limited capacity, this could be a really beneficial solution.
Mm-hmm. I really, really like it. Meico, I interrupted you, and I really want to also get your opinion on this next piece of our conversation, and that is, communications and how we need to be thinking about finance. What are you seeing, Paul? Because to me, it seems like a new day. We're trying to do a better job at how we communicate.
Yeah, no, that's a great question. It goes back to, we spoke a little bit earlier about providing feedback and enabling non-financial managers to make the best decisions. What comes to mind to me is setting a culture of budgeting, right? And then the CFO, the tone from the top, it's a cliche that you hear, but it's one of those cliches that is 100,000% true in terms of setting that culture where we have a budget calendar. Here's how the process works. We're enabling our non-financial managers to make decisions, and we're giving them the freedom to do that while also providing the resources they need to make those decisions. And then, we're also holding people accountable, both positively and giving feedback for improvement through the performance review process. But, that's how I think of it in terms of this big culture of budgeting versus just one budget in one silo. And it's something that we do.
Yeah. Yeah.
And so, Paul, is this a matter of, as part of that culture that you're talking about, is this about training? Like what goes into building this culture from the top down that you were just talking about?
Yeah, I think it's a number of things. Let's start with training. I think it's building into the process the financial training that we discussed before, making sure all our employees get some level of financial training or acumen, while also building in the ability to get feedback from the experts in play. Then I also think it goes to the calendar of, we're setting deadlines, we're establishing a culture of trust where we meet those deadlines so we can get that information to the board. But then also, too, we have to make sure the board's held accountable as well through the same training, through meeting those same deadlines, while also showing empathy to everyone in the process. And I'd also add, too, not just focusing on the quantitative impact, right? Not just focusing on the numbers, but the qualitative aspect, right? I always like to think about the budget, not just, oh, here's how much money we spent, but maybe here's how we served our members. Here's how we helped someone in need. Just making that quantification into a qualitative characteristic that shows what the nonprofit does. That's important to me as well.
So on this point about communication, like you mentioned, the importance of educating our non-financial staff and board folks. I wonder if it can go the other way in terms of the financial folks being educated in a way that they're able to communicate to sort of the lay folks and able to generate reports that actually make sense to the lay person. Something that I've seen sort of working inside of organizations is sometimes what's reported out or what's communicated out is sort of for other financial professionals. And I wonder if there's an opportunity here to sort of balance things out with the financial versus non-financial experts here.
Oh, yeah. No, as a financial person, I know I have learned a lot. I still can learn a lot. And I think there's an opportunity for everyone to learn here. Yeah, I 100% agree with what you said. One of the things that comes to mind is a CPA firm that we give all of our people training on is simply the idea of project management. And someone said it to me the other day, they don't teach project management in college. You learn it. And, I think that's a very underrated skill that what did we just talk about? We talked about managing this huge project, the budget.
Yeah. Yeah. It's such an interesting thing because I think the first time I sat in a board meeting where the auditors came in and they were lovely. They were super, like ask me anything, super encouraging. But I noticed that the social dynamics these were high powered people from the community, and they did not want to admit that they didn't understand something or that they had a question. It would have been easier to say, well, why did you spend so much money on paper clips versus asking the question like, I don't understand what this trend indicates or whatever. And it was a shocking lesson because I knew I was a pretty smart cookie. And if I had questions, but I was intimidated to ask because nobody else was asking. And yet that had been, it was a large organization and it was a very prestigious, at the time, what we called the Big 8 accounting firms. Nobody spoke up.
We have had those meetings as well. I'm not going to lie. Yeah. That's right. That's another one of those things where I don't profess to have the solution to all of the accounting world's problems. If I did, I probably wouldn't be on the podcast right now. I'd be doing something else somewhere else. You know, I'm always a leader who likes to lead by example. And, you know, I think it does help when, you know, other folks in accounting firms see you being vulnerable, right? Because I don't know the answer to everything. And when your other team members, your other colleagues see you asking questions, you know, I think that could empower them to do the same.
Yeah, I think so too. I think it's also, as Meico, you know, has used this word so often, it's part of the culture of an organization, you know, to say, you know, we're not going to know everything, but we need to navigate it as opposed to just kind of rubber stamp it. And I think that that is a pattern of behavior for a lot of boards. And then they're kind of slammed when something comes up and they weren't prepared for it, right? Because they never engaged with whatever that problem is. So that kind of leads us to our last piece of our time with you today, Paul, and that's communicating to the board. What are you seeing with the nonprofit sector? Are we using more infographics? Are we using more narrative? Are we, you know, just trying to reduce the amount of information we share, or all of it? Like, what are you seeing that's actually working?
What I've seen in my experience, it's interesting. It goes back to relationships first to answer the questions you said. Because I think each board is different, and you need to know those board members to know how they digest financial information and how they communicate to make that an effective process. Because nobody's the same. And if you just try to take the same approach to every board, it is not going to be a success. What I have found is the best path to a win-win for all involved is building those relationships. And where do you start? I think it's through the board orientation process. And if you don't do a board orientation or some sort of board retreat every year, that's a process I'd highly recommend, because I think it has a lot of benefits, right? Because it allows you to connect with these individuals one-on-one, understand who they are, where they come from, you know, at a basic level, what their financial acumen is. And that could give you a little more insight to say, oh, this is a person who digests granular information. They're going to want to see financial statements. But conversely, they could be a person who's higher level, and maybe a dashboard more fits their needs. But by understanding who they are and developing that relationship, that gets you there. And the other benefit that it provides too is in establishing that relationship, communicating when all these things go on that we've been talking about during those podcasts. And I want to acknowledge they're not easy. Having that relationship there does aid getting to the right answer and does make it a smoother process during difficult times.
So I want to ask maybe one final question from my end as we begin to wrap up here, but I'm curious, you know, what recommendations do you have for board members in terms of like, what is their responsibility? What should they be looking at in terms of the financial management, right? Should they be looking at how many paper clips are being purchased, or should they be looking at the budget scenario planning? Like, what is the appropriate role for board members when we think about the financial aspect of running an organization?
A question we could answer over 2 hours, and we'll condense into a minute. You know, when I think about nonprofit organizations and financial statements, right? The easiest thing to pivot to is the bottom line, the net income, or for nonprofits, at the change in net assets. But that being said, while that's indicative of 1 year, is one bad year going to put an organization out of business? You don't know the answer to that. Where you should pivot to first are your operating reserves or net assets, right? Because if you have negative net assets, and for those who don't know, that's equity for a nonprofit organization, or negative reserves, which again, that's just the amount of cash and assets on hand. Even if you have a good year with that negative amount in mind, you may not be able to continue as an organization in the future. And you know what I like to say, the quote unquote rainy day fund, I start at 6 months of operating expenses, and maybe you could pivot up if you're an organization that can be nimble, has the ability to draw on an operating reserve. And then you could pivot down in another scenario. But that's where I'd start. And then number two, Nico, I would say in a cash flow analysis. I think you asked earlier, what are the lessons you learned from the pandemic? That's a big one, right? Because a lot of the organizations we worked with, they just always assumed oh, cash flow is not going to be a problem,
Right.
then overnight cash flow is a problem. So I
Mm-hmm.
think doing some sort of cash flow analysis is important too, just to see that we're liquid.
I love it. Meico, I think that's a great question because it kind of speaks to how is it that we're going to lead? And if we don't know the questions or the areas of risk, it's really hard to lead, right? Because
Mm-hmm.
you're spending up time on things that may have no consequence,
Right.
and completely avoiding or underestimating things that could bring you to your knees, and then it's like a shock when it does, right?
Absolutely.
Yeah, it's really a frightening thing. Paul, how do we stay calm and carry on, as they say, when there are times that are so changing, and fear based? What are you telling your clients now, when you're not only communicating to the board but just looking across the landscape? Um, how do you deal with these changes that are so substantial?
Besides using the Calm app and doing breath work and meditation, that's where I start. What a wiser person once told me was, nobody has ever died doing accounting, and to the best of my knowledge, in 19 years in this business, I have yet to see someone die doing accounting. No, what I think about is just remaining calm, remaining diligent, and just knowing the financial. I would say this: having the necessary financial information we need to make decisions, and making prudent decisions, knowing that you can only make them based on the information you have at hand. And it might not be right, but we're just doing the best with the information we have. And I mentioned this before, but the tone at the top, again, I want to emphasize how much that matters, because if the people who work with you see someone who, what's the right word? Let's just say they're not in the right mindset. We're using a lot of negativity, then that's what they're apt to do. Whereas if they see someone who's a little more calm, who's just processing information, I think you got a better outcome in hand.
Yeah. They call it stressification, right? So like if you're stressed out, it's contagious, right? And so, but the reverse can also be true, where, if you're embodying sort of a calmer approach to things, that can also be contagious inside of the culture of an organization.
Mm-hmm. Yeah, Meico, I love that. I love that you kind of taken us home with that, because that's a great way to be thinking about this. In a time of phenomenal change and uncertainty, it's really easy, I think, to disengage, right? Because it's so tough. And I fear for our nonprofit sector, that this will be kind of showing up with a number of board members leaving or retiring early, or saying, I can't do this. I have enough going on in my home or my direct community, that I can't extend myself. And I feel like we're going to be losing talent that way. And so I agree, to understand how we can, navigate these things, and be calm and look down the road, not just,
Mm-hmm.
the immediacy of the car crash, but to say, okay, how do we build a better highway? How do we build a better car? I think that's kind of where we need to go. And so it's really been great, Paul, to have you on. I'm so appreciative. Paul Preziotti, CPA, a partner at Johnson Lambert. You can learn more about Johnson Lambert at johnsonlambert.com. You can see all the different types of consultancy practices that they have. And I think it's really interesting, Paul, that business has changed so much that you can't just be an accounting firm anymore. You have to really be, on the leading edge of things, from technology to you brought up communications. The consultancy aspect of the accounting world, I think, is a fascinating shift, and a welcomed one. So it's been fun to have you on the Nonprofit Show. Thank you.
No, thanks for having me. Appreciate the time.
Yeah, it's been a lot of fun. Meico Marquette Whitlock, of course, one of the great minds in the nonprofit sector, across this country of ours. I am delighted that he is one of our co-hosts. It's always really magical to have you on. So thank you, my friend. I'm very appreciative. I'm also very appreciative that we have these amazing presenting sponsors. They include Bloomerang, American Nonprofit Academy, Staffing Boutique, JMT Consulting, Interim Executives Academy, Your Part-Time Controller, and Fundraisers Friday. We end each and every episode of the Nonprofit Show with this mantra. It's simple, but it's complicated. And it goes like this: to stay well so you can do well. Thanks, everyone.